Okay, so guys, welcome to another exciting edition of 10 Trade Webinars. And today's webinar is very, very different in the sense that we are going to be looking at trading strategy. All right, so this is a new series that that Tenrid is bringing to the table, whereby each educator on the platform will be teaching you guys trading strategies. Okay, and in my particular session, I'll be taking you through my entire trading setup. I'm going to be starting from the very basics, right, of smart money concept, right? How to trade institutionally. Institutional trading concept is what we're going to be looking at. And it might take us somewhat about 4 to 6 or 7 classes to fully exhaust all of the content in my trading setup, right? So this is the first of many classes that I'll be having of this nature. All right, so buckle up, guys. I must tell you, what you're getting access to, right, is very, very valuable, right? Only 10 Trade could make me do this for free. All right, so you've been learning something that a lot of people would pay through their nose to learn. So you're getting access to it for free because you are a client of 10 Trade. All right, so Ambrose is asking, is this fair? Going to put, so Ambrose, this is a trading strategy class, all right? So we won't be doing live analysis in this particular session, all right? So you are learning how to trade smart money concept, how to spot the blueprint of the market makers so that you can follow exactly what they're doing, all right? So that's what this class is all about. And tonight, we start with the very, very basics, right? And tonight, we will look extensively into the concept of market structure, all right? In a second, we are looking at market structure, all right? Now, if you've been following my live sessions for a while, you'll always notice that I always make mention of market structure, all right? Because before you start taking a look at how your trading system will align, the first thing you want to check out in the market is the market structure, all right? Because that is what will determine or tell you the direction in which you should be trading. It will give meaning to all of these, candlesticks right here. All right. So you'll be able to properly interpret the moves currently printing on your chart. All right. Now, and I'm going to take my time in explaining this to you because for some reason, some of us might not know market structure as I'm going to teach you tonight, all right? So please ensure that you are very, very attentive. I want to recommend that you have a notepad and a piece of paper. Now, this is not those classes that you participate in and you will not jot down something, all right? So ensure that you are jotting down these things because it's going to be very, very useful for you in your trading journey. Okay, so now let us start from the very, very basics. I'll start from what we know about market structure, and then I'll move on to what we might not know about market structure. All right, Ambrose, I need you to listen to what I'm saying. All right, I'm telling you that this is not a live trading session. All right, you're asking me to bring up a chart. All right. So market structure. So now everybody here understands the concept of lower highs and lower lows. So before I start, because of what Ambrose is doing, let me do a quick poll. Now, how many of us know why we are in this session? All right. Are you in this session for a live trading session, or you are in this session to learn about trading strategy. Okay, how to trade smart money concept. Right? Let me hear your feedback in the chat box. Right? If you are here to learn how to trade smart money concepts, all right, type in smart money, type in SMC in the chat box. All right, so Ambrose, you're here to learn SMC. So why are you telling me to bring up the chat? Okay, so we are not looking at the charts today. We'll still look at the charts, okay? All right, so Christian said SMC, John. All right, perfect. So you are in the right class, everybody that says SMC. So let's just listen attentively and follow exactly what I'm doing. All right. When it is time to show the chart, I'm going to show the chart. Okay. Perfect. All right. So now, going into what I was talking about. Now, most of us know the concept of lower highs and lower lows, right? You know that price. You know the concept of trends. Now, price moves in two directions. The other price is going in an uptrend or price is going in a downtrend. Now, this is how an uptrend looks like, something like this. Okay. I believe we all know this, right? Every beginner knows this in Forex. Okay. And then when price is going in a downtrend, it goes like this. Right? And what makes up a trend? You have impulse moves, corrective moves, correction, and impulse. All right. So that is what makes up a trend. And then talking about the labelings, right? We have in an uptrend over here, you have the higher low. And we have higher low right here. And then over here, you have the higher high. Okay. I'm taking it step by step for a reason, so just follow along. We have higher highs right here, higher highs, okay? We have higher lows, we have higher lows over here. Okay? Now, in an uptrend like so, you want to be looking for buys, right? That's what we were taught when it comes to market structure, when it comes to trading. You want to spot the trend of the market, and when price is in an uptrend, you want to look for buying opportunities. That's what everybody was taught. Okay. Now, in a downtrend, this is your lower high, and then over here, so you have lower highs, you have lower highs, and then you have lower lows right here. All right, so a downtrend is made up of lower lows and lower highs. Now, in a downtrend, what you want to be doing in a downtrend, you want to be looking for sell opportunities in a downtrend, right? In an uptrend, you want to be looking for buy opportunities in an uptrend, okay? Now, we all know this. Now, in this market structure class, there are a few things that I want to talk about that will add meaning to what you already know. Okay, so we're going to go a bit deeper. So in this class, I'm going to talk about major structure, right? So I'm going to talk about minor structure. We're going to talk about swing structure. Okay. Swing structure, and then we'll talk about change of character, and then we'll talk about break of structure. Okay, so these 5 concepts, we're going to deal with these 5 concepts in this market structure class. All right. If you can get a hang of these 5 concepts, you would have been able to properly demystify market structure as it should be demystified. When you look at the markets, when you look at the charts, you'll be able to fully interpret what is going on the chart. Basi Ayo, you're welcome. Abulabi, you're welcome. Effion, you are welcome. Okay, so we just got started. Set it down, guys, and ensure that you are taking notes. I cannot stress that part enough. Okay, so let's start from the concept of break of structure. Okay, let's start from break of structure. Now, this is something that you come across a lot when you are trading smart money concepts, right? Break of structure. Or let's start from major structure. Okay, let's start from major structure. When it comes to major structure, this is what a lot of us were taught. And we were taught half information. Okay, now these higher lows, you know, higher highs and things like this. Okay, this is what we were taught. Now, all of this right here is called major structure. Okay, just follow along with me. I'm going to differentiate everything: major structure, minor structure, and swing structure. We'll differentiate it so that you understand the chart properly. But when you were being taught about higher lows and higher highs, what you were taught, okay, is called major structure. Now, other educators that teach smart money concepts might call it a different thing. But the way I look at the market, the way I look at market structure, institutionally, is to call this basic structure here market structure, called major structure. Okay. Now, major structure is your, in this case, your higher highs, okay, and your higher lows. Okay, so major structure consists of higher highs and higher lows. Okay, now talking about major structure, when you have something like this, okay, now when you want to, so this is an uptrend, okay, and where do you want to look for buy opportunities? You want to look for buy opportunities, right, at a higher low, and when price creates new highs, okay, a new major structure has been created. All right, so all of this, these higher highs, okay, when price is creating new higher highs, you will say that price is creating new major structure. Okay, when price has created a higher low, you say that price has created a major structure, higher low. All right. Now, a higher high, okay, is created by a higher low. So you won't really know where the higher low is until a higher high has been created. All right, so this is major structure right here. And another thing that validates major structure, that validates creation of major structure, is what we call break of structure. Now, for a major structure to be created, right, price needs to break structure. There has to be a break of structure. So what do we mean when we talk about break of structure? All right, so let's do another example here. We've established that is how, so something like this. Okay, so when price is creating a higher low, okay, this right here, this is a previous higher high, right? Or this is the most recent higher high, right? For price to create new higher high, this previous higher high needs to be broken. Now, when that break happens, we call it a break of structure. So when price goes up, keeps going on, then breaks this higher high, we call this a break of structure. So for new highs to be created, all right, price needs to break structure. So the short form for it in the smart money concept community is BOS, right? So we call this a break of structure. So a major structure can never be created until price breaks structure, until there's a break of structure. And what is the characteristic of a break of structure? It is that when price goes up and goes beyond this high, the body of the candle needs to close above this zone. So I'm talking about this. So this is a bullish candle, like so. Let's make this green. All right. So the body of the bullish candle has to close, okay, above this structural area. It is until there's a body, okay, so once the body breaks and closes above that zone, that's when we say that price has broken structure. When that happens, right, that means price wants to create another major structure. All right, you might have a scenario whereby price will go beyond this high, and then possibly it's just a week, like so. Okay, if a high is created by a week, like so, okay, it is not a break of structure. All right, if price breaks this structure here with a week, all right, this higher high still remains the most recent major structure. Price has not given us a higher high, okay, because price has not broken structure yet. All right, so you said that price is creating new major structure. Price is creating new higher highs when there is a break of structure. And a break of structure occurs when the body of the bullish candle, in this case, closes above the previous structure here. Let's do an example for a bearish scenario. So when you have something like this, you have your impulse move, correction, and your impulse, right? The price is retracing here, right? In this case, this is your lower low, right? Lower low. This is your lower high. Okay. Now, for price to create a new lower low, that means price wants to create new major structure. And for major structure to be created, there has to be a break of the previous structure or a break of structure. In this case, the break of structure has to be the break of this lower low right here. All right, so for price to create a new lower low, this lower low here, this structure here has to be broken. And that break of structure is characterized by the body of the bearish candle has to break this zone and the body has to close below this zone. So this is what I'm talking about. So the body of the bearish candle needs to close below the zone, like so. Okay, it is when this happens that you say price has created a new major structure. In this case, the major structure, excuse me, is a lower low. If price breaks a structural area or goes beyond this particular structure, and that break, it was broken by a wick. It was broken by a wick like so. All right, this is not a break of structure. All right, if it's a wick that broke this structure here, is not considered a break of structure, right? A break of structure is validated by the body of the candle has to close below this zone. Give me some feedback in the chat box, guys, if you understand that particular concept, right? It is a very, very important thing to know when you want to start trading institutional, all right? Because a lot of times you are going to see wick that will break structure, and then you might be tempted to think that a major structure has been created, right? If you understand what I've said so far, please type in yes in the chat box. All right, so Joshua understands. Can I understand? John understands. Please, if you don't understand, can you let me know? All right, I'm taking my time. Ambrose understands. Perfect. So we've talked about major structure. We've talked about break of structure. Ogochukwu is asking a question. What if is the body of a bearish candle appears above the higher high of an uptrend? Are you talking about something like this, Ogochukwu? So let's say this particular example. Are you saying something like this? Something like this? Ogochukwu, is this what you are saying? Check this, check what's on the chart. Right? You need a bullish candle to break and close above this zone to be considered a break of structure, not a bearish candle. Okay, so for the case of a higher high like so, a bullish candle, the body has to close above. Okay, if it is a bearish like this, right, a bearish candle has to close beneath this zone. All right, so we've spoken about that. Now let's go into the concept of minor structure. All right, so this is major structure like so. All right, now this is your higher high. All right, and this is your higher low. Okay, any structure, right, between higher high and higher low is called a minor structure. So you might have something like this. Okay, this right here is a minor structure. Okay, this right here is a minor structure. Any kind of structure, okay, on a fractal level between higher highs and higher low is called a minor structure. Okay, also you might have something like this. So you can see when you look at it on a fractal level, on a microscopic level, sometimes, right, you see it's going like this. The structure between higher highs and higher lows is called minor structure. Because you know what we were taught when we were learning structure as a beginner was a generic way to look at the market. You were taught an idealistic market structure. Now, very oftentimes, the price presents itself perfectly like so. All right, price does not present itself perfectly like this. All right. So what we price do most times is do something like this, right? That's something like this. Okay. On a fractal level. Okay. In this case, all right, this right here is your higher high. Okay. This right here is your higher low. This is a realistic way that price will itself. Okay, this is a higher high. Okay, so the structure between higher high and higher low is minor structure. So it is within so it is within your major structure that you're going to see minor structure, right? And then what minor structure would also help you figure out is the reversal areas. Okay, so in this case, this is over here. Okay, this is minor structure, right? Now it will help you know when price wants to reverse and starts going up, right? It will let you know, right, where the higher low is going to stop or where price will start to pick up. All right, because you understand what is called minor structure. All right, minor structure helps you to know the reversal areas in a major structure. Now, the reversal areas in a major structure are your higher lows and higher highs in an uptrend and higher lows, right? You know that for price to give you a correction, right, to start dropping from a higher high. Now, when you start to look at the market from a minor structure perspective, you will know when a higher low is about to fall. You will know when the correction, the real correction is going to start. All right, so let's talk about that real quick and then we'll buttress this part. Now, I'm going to jump to the concept of change of character real quick. Now, I'm trying to merge everything for it to make sense to us. Okay, now let's talk about the concept of change of character. Change of character. Okay, if you're in the SMC community, it's called CHOP. Okay, change of character, or you say CHOP. All right. So what is change of character? Change of character is only used on minor structure. Okay. It is only used on minor structure. Sorry. All right, so change of character is only used on minor structure. So change of character talks about, it helps you know the reversal area. Okay, it is simply a shift of order flow from bearish to bullish and from bullish to bearish, vice versa. So change of character helps you to know when order flow wants to shift from bullish to bearish and vice versa. Okay, am I communicating? I'll take it again. Change of character helps you know when when order flow wants to shift from bullish to bearish and vice versa. So what am I talking about here? Now, when you look at minor structure like so price is giving you new highs like so, okay? And this is a bullish order flow, isn't it? All right. So how will you know that this order flow wants to shift from bullish to bearish? All right, that's where change of character will come in. All right. So for change of character to occur, you want price needs to break this higher low structure right here. All right, price needs to break this low. Price needs to break this structure. All right, so once this structure breaks, like so, and the break of the structure, when it comes to change of character, this break can either be broken by a wick. Let me make it bigger. Please note, very, very important. We're talking about change of character here. Change of character, chop. When order flow wants to shift from this bullish to bearish, this higher low, this structure has to be broken to the downside, right? The structure has to be violated. And that violation, that break, the body of the candle can break and close below it, or it can be broken by a wick. So either one is acceptable, only on minor structure, guys, not major structure. Right? That's why I'm reiterating that we only use change of character on minor structure. I'm going to explain on the chart shortly. All right. So I'm saying, so price can be broken like so. So this is a bearish candle. All right. The body can break below it, or price can do this, or it can be broken by a wick like so. Whichever one you choose to use is correct. All right, so the break of structure on change of character on a minor structure, okay, once that break happens, that is your first signal that order flow wants to shift, in this case from bullish to bearish. All right, and once price breaks structure like so, change of character, you want to now start looking for sell opportunities here. So once price retraces into this zone somewhere here, right, you want to start looking for sell opportunities. So that is change of character right there. Now also, please note that change of character does not work every time, right? So we might expect a sell here, and price might just continue going up, like so. So that means you might lose that particular trade. Okay, let me know if you are following. I'm trying to take it step by step. I hope I'm doing a great job on teaching you this concept. If you understand what I've said so far up until this point, please type in a yes in the chat box. If you don't understand, let me know what's not clear to you before we move forward. Okay, Ambrose understands. Can I also understand? Who doesn't understand? I'll also do an example for the bearish market. Okay, Joshua also understands. All right. Okay, so here's what I'm talking about. Okay, Aflabi said not really. Okay, no problem. So just stick along. All right. Now let me give you a picture example. So Let's look at major structure. So this is major structure. Okay. Impulse, correction, impulse. All right. So we have over here. This is your higher low, right? And then this is higher high. Okay. Now, any structure that happens, any kind of market structure that happens within higher low and higher high, within this major structure, it's called minor structure. Now, remember that taking a look at this major structure, what are we expecting to do? We're expecting to look for buy opportunities somewhere here, right, at the new higher low. And then once you look for buys, we are anticipating that price will create new highs, right? Because that's the way market moves, all right? But a lot of times you might not see, price might not show you this way, all right? When you look at the market fractally, you see that price is like this, okay? So this is minor structure, like so, giving you lower highs and lower lows. How will you know that that price is about to reverse, right? You see a change of character on that minor structure. So let me use a different color for minor structure. So this is minor structure, right? Now, how do you know that a new higher low is about to be created? How do you know that this order flow here wants to shift from bearish like so to bullish, right? We want to see a change of character. And by a change of character, all right, guys, sorry about that. Okay, so I said just give me a second. I'm back. So now, this is the structure. This is the structure. Let me know if you can hear me. Type in 1 if you can hear me now. Let me know if you can hear me loud and clear. All right, thank you. So this is minor structure right here. Okay, and minor structure is happening inside major structure, like so. So how do we know that a new higher low on a major structure wants to be created? On a minor structure, like so, the order flow needs to switch. And then you know that because of a concept called change of character. So price needs to break this structure. Okay, that is your first signal of a change of character. Once that break happens, price will retrace into an order block, which you see on about or a demand zone. And then price will keep going up like this. So this is minor structure being created, like so, until it creates a new high. All right, so once this high is created, you will see that price has broken structure. And that breakup structure is characterized by the body of the candle has to close above the zone. All right. Let's look at minor structure in a bearish major structure, like so. So we have major structure, impulse, correction, and impulse. This white. Okay. This is your what? Lower low. And this is your lower high, isn't it? Now, everything that happens between your major structure is called minor structure. So, what do we know about major structure? This is a downtrend, for example, and in a downtrend, price will correct itself to form a lower high, isn't it? And then price will create a new lower low. Okay. But minor structure would help us know where the reversal is going to happen. Okay. Any structure that happens in between higher lows, lower highs, and lower lows, so it's minor structure. So in this case, you'd have something like this, right? Minor structure being created. Okay. New highs being created like so. This is a different color for this. Okay, so for minor structure, all right, for order flow to shift from this bullish to bearish to bring for the end of this to happen, for the lower high to kick in, right, the order flow needs to shift. All right. And how do you know when order flow wants to shift? It is a concept of change of character. Change of character. And how do you know change of character? Price needs to break. Okay, this case, this lower high like so. This is a lower high. Okay, price needs to break this structure like so. Break of structure. Okay, we trace into a supply zone right there, and then price will keep going down. And it's going to form a lower. All right, so you see all of this happening, okay, inside major structure. Okay, is it clear so far? Do you understand the relationship between major structure and minor structure? Okay, do you understand the relationship between major structure and minor structure? Give me some feedback in the chat box. Okay, I know it might be a bit new for most of us, but you know, we are going somewhere, right? What you are learning in this first class is your building block to really trading institutionally. Once you can get a solid grasp of this concept, you know so much more than a lot of other retail traders know. You will be able to understand exactly market direction. You would have a crystal ball effect on the market. You'll be able to interpret exactly what price is doing, price action. All right, so let's take it step by step. We still have about 5 to 6 more classes together. So everything that we'll be doing in the next couple of sessions will be built on your knowledge of market structure. Like I said, market structure is the foundation. If you get market structure wrong, you get your analysis wrong. You might be trading in the opposite direction. You won't know exactly where price is going or what price is doing currently. Okay, So we've looked at major structure. We've looked at break of structure. Now we've looked at minor structure. Okay. So let's look now, and then we also looked at change of character. Now let us look at the concept of swing structure. Okay, it might be a bit confusing, swing structure, but please just stay with me. Okay, stay with me. And I want to recommend greatly, this is those webinar sessions that you need to watch the replay. I can guarantee you, you have to watch the replay of this session to really understand it. Okay. Now, let's talk about swing structure, and then we'll bring everything together. Okay, major swing structure. Major swing structure. All right, so let me start by defining what major swing structure is. So major swing structure gives you the real structure of price. It gives you the long-term structure of price. Okay. Now, a major swing structure is formed okay. A major swing structure is formed when major structure at reversal of major structure. All right, major swing structure is formed at the reversal of major structure. Okay, major swing structure is formed at the reversal of major structure. So you would only find major swing structure outside of major structure. So here's what I'm talking about. All right. So when we have major structure like so, all right, so you have okay, so let's do this. You have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Now, how just something very, very similar to what we have on minor structure when it comes to change of character is for a major structure to also shift. When order flow also wants to shift on a major structure, right? Higher low needs to be taken out like so, right? Higher low needs to be taken out. So once price takes out higher lows like so, okay? That is your cue for major swing structure. Okay, so when you have something like this happen, this at the top, this is now called a swing high. So a major swing structure is made up of swing highs and swing lows. All right, so you have swing highs, and then price is going like this. Oops, hold on. So you have price doing this. Okay. Now, I said major structure is formed at the reversal of major structure. Major swing structure, rather, is formed at the reversal of major structure. Now, all of these white structure here, this schematic here is a major structure. Okay, this consists of higher highs and higher lows. Once the price shifts, okay, once we see an order flow shift, that means a higher low needs to have been taken out like so. Once you see a higher low being taken out like so, that means this high now becomes swing high. Okay. Once the structure shift, that means you now have new lower lows being printed like so. All right. If price breaks structure like so, okay, if price breaks this lower high structure by giving you something like this, okay, and remember guys, that break has to be characterized by the body of the candle has to close above this. Once this break happens, right, this is now your swing low. Don't worry, it will come together for you in a bit. Just follow along, okay? Aflabi is asking, can it break with a wick? No, it has to, the body of the candle has to close, has to break it. So a major swing structure gives us a good view of the real structure of the market. So major swing structure is a deeper level of structure above the major structure, right? And the major structure is a deeper level of structure than the minor structure. So when you want to know the real structure of price, you want to really look at price action. That means you are dealing with the swing structure, the major swing structure. All right. So, and a swing high is formed when we see a reversal of major structure, and a swing low is formed when we have a reversal. Okay, when we have a reversal here of major structure. Okay, so major swing structure is made up of swing highs and swing lows. Let me use this. All right, so this a lot of times will not become protected. Swing high will become protected like so. So this is a swing low. Okay, I'm trying my best not to make this as clear as possible. All right, so when we have a swing low printed like this, so the next thing that you're looking forward to right now is for price to either break a swing high or break this swing low. All right, so just the way you have, let me say it this way, just the way you have price like this, you know, market structure is quite interconnected. I just hope it's a bit clear to you. Just the same way you have price doing this, okay? Just something similar to your market structure. Okay, so let's look at it from this perspective, right? This is, in the case of a major swing structure, okay, this is your swing high. This is your swing high. And then this is your swing low. Right? Everything that happens in between swing high and swing low is major structure. All right, something similar to major structure. And then we said that for a major structure, what happens between major structure is called minor structure. Okay, so in the same vein, what happens in between major swing structure is called a major structure. And Major swing structure is created when it's formed at the reversal of major structure, like so. All right. So of course, characterized by this break right here. You always see the break. Okay. So when you see a swing high, you see a swing low. All right. You are expecting that price will come beyond this. Okay. So price will give you a new swing low, like so, and a new swing high. Do we understand? Please type in yes if you understand, and then we'll look at the chart shortly to really buttress this point. Okay, let me know if we are together. Type in a yes if you understand what I'm saying. Oh, I'm so sorry. I'm so sorry. I'm so sorry. You can hear me now. So I was saying that I would like you to watch the replay, guys. And in that replay, we talked about 5 things here. Okay. You want to understand major structure properly, major structure, minor structure, major structure, break of structure, and change of character. All right. These are the 5 things that you want to really, really learn when you watch the video. I really recommend it. Okay. Now, based on what Apolabi Adeni is asking, for change of character, yes, you are very, very correct. Either with the body or the weak is valid. And in buttressing the concept of break of structure, I was giving this particular example here. This is the break of structure right here. Now, you know, what a lot of retail traders do is something called break and retest. So for most retail traders that still trade support and resistance, you know, when you have something like this, this is a resistance. This is a resistance turn support. All right. So a lot of retail traders once price retraces into this newly found support, they are looking for buy opportunities over here. Okay, break and retail traders. Okay, but when you are trading institutionally, right, you don't want to be a part of this, right? You want to take entry far below the break of structure. So in this case, your higher low has to be way below this zone. Okay, so below the break of structure, because obviously a lot of people stop losses below this support zone. People's stop loss will be here. In our next class, we'll talk about liquidity, and you will know how the market makers take out stop loss and why they take out stop loss, and how you can take your entries after liquidity and grab. So you want to look out for the next class. So when price has given you a major structure or a major high, like so, you will see your break of structure. Now, you want to take entry at the correction. You will not take entry at this break of structure here. You want price to still go deeper before you take your entry for a buy, right? In the same vein, for a very slow like so, we have impulse, correction, impulse, right? This is your break of structure over here. Okay, you want to take your entry for price retraces. Okay, it has to retrace beyond your break of structure, beyond. All right, and then once that happens, you look for your sell opportunities. All right, now, which now brings us to the concept of premium and discount. Let's look at premium and discount shortly. Then we'll go to the chart. All right, let's look at premium and discount. Okay, so we are all traders, right? So let's say you are buying, you are into fashion items. You sell fashion wares and accessories. Okay, as a trader that is into buying and selling, will you prefer to buy at premium or buy at a discount? Type your answer in the chat box. Will you prefer to buy at a premium or buy at a discount? Okay. Type your response in the chat box. Will you prefer to buy at a premium or buy at discount? Afolabi said discounts. Who else is it Afolabi?
Shorty lurking on my page.
John said discount as well. Right? All right. So the logical thing to do is to buy at a discount. And then as a trader, you would also prefer to sell at premium. All right. So you want to buy at the discount price, and then you want to sell at premium. So now, how do you figure out the discount zones in the market that you should be buying from and premium zones in the markets that you should be selling from? Okay, so how many of us here understand the concept of Fibonacci? If you understand Fibonacci, type in yes in the chat box if you understand If you don't understand Fibonacci, type in no in the chat box. Okay, because your knowledge of Fibonacci will help you understand premium and discount zones in the market. Okay, Aflabi doesn't understand, Ambrose doesn't understand. Who else doesn't understand? Or who understands Fibonacci here? Can I get more responses? Is Wisdom, John, Joseph is a king, Joshua. Okay. All right. So most of us don't understand Fibonacci. Okay. So maybe we'll look at Fibonacci properly in the next class, right? But here's what we want to know very quickly. When we talk about premium and discounts, so let me give an example here. This is a bullish environment like so, right? This is your break of structure. Okay. Now, in order for you to buy over here, now this is a bullish environment. And then we know that in a bullish environment, it makes sense to wait for price to correct, okay, into a higher low before we look for buys, okay? And then there is a zone where you should be looking for buys, okay? And that zone is called the discount zone. And what can help you understand the discount zone is anywhere 50% and below, okay? Via discounts, fib level, okay? Fib level 50 to anywhere below 50 is discounts. Premium is 50 to 1. Anywhere above 50% is Fibonacci, is premium. All right, Ambrose, if you miss the next class, there will be a replay. Okay, so next class we are talking about a lot of things actually. So I can't do next class syllabus today. All right, we are already past the allotted time. Okay, for tonight's class. So that's why I'm trying to rush it. All right, but just stay with me. So when you take your Fibonacci, so Fibonacci is, let me just paraphrase Fibonacci, is simply geometry, right? So we have something we call Fibonacci retracement and Fibonacci extensions, right? So when you look at market structure like so, impulse, correction, impulse. Now, when we look at Fibonacci, you know, this is over here is your higher high. This is your higher lows. Now, with Fibonacci, when we measure price from here to here, Fibonacci retracement will give us an idea as to where price is going to retrace to before it starts going up. It will also give us an idea as to where price is going to go up, where it's going to get to. Okay, so this move down is called a retracement, and this move up is called extension. So how do you know your fibs? Let's quickly do that. There's a tool on your trading view. Over here, you see it, Gann and Fibonacci tool. So Fibonacci, you see Fibonacci retracement. So we want to measure from this higher low, you measure it, you take it up, okay, to this higher high. Okay, so let me just use, we are only concerned about one particular price. Okay, So we're only concerned about having 3 values of numbers here. So 1, 0.5, and 0. So when it comes to premium and discount, anywhere from 50, once price retraces to 50 here, anywhere from 0.5 to 0, all right, is a discounted price. So you are not interested in buying when price is still in a premium. So premium in this case is 0.5 to 1. So over here in this case is a premium zone, right? And over here is discount. So as a trader, you are looking for buy opportunities in a discount, right? It is zone. So anywhere in this area between 0.5 and 0 is where you want to be looking for buying opportunities, because that's a low point in the market. It makes sense to buy at a discount. You would get a very good entry at a discounted zone. All right. There are times that price might, take off from premium, but it happens very, very rarely. More often than not, you see price come into a discount. Okay, so price will come into a discount like so. Okay, before going all the way up. Now, when it comes to a sell scenario, this is a bearish market. In a bearish market, we want to measure from lower high to lower low. You take your Fibonacci, you measure from top right here to bottom. Now, in this case, the premium is this zone. This is premium. Okay, and this is discount. When it comes to selling, you want to be selling at premium. All right, so in that case, you want to wait for price to retrace above 0.5 or 50%. Okay, before looking for sell opportunities. So you're looking for sell opportunities in this zone here, like so. And then we go all the way down. Okay, so that is the concept of premium and discount. It just pretty much tells you the zones where you should be buying from and the zones you should be selling from. So we want to buy at discount and we want to sell at premium. Do we understand this concept, guys? So what I want to do now, I'm trying not to rush on because learning how to trade institutionally is a different ball game entirely, as you might have noticed. It's very, very different than what you are used to. And because I want you to understand this thing properly, I don't want to rush this concept. Right? So I'm going to stop here tonight. And please, before our next class, we have ample time to really dig deep into this concept. So let's take it step by step. I know what I'm saying. All right. So next class, I will go deep into Fibonacci properly. And then next class, we are also going to look at everything that we've talked about today. We will look at them in the market. So in the market, we are going to outline major swing structure. We are going to outline major structure. We are going to outline change of character. We are going to outline everything that needs to be outlined. Okay, so that will give meaning to what you've learned tonight. All right. So please look out for the next class on my series. It's going to be a very, very interesting ride, guys. I can guarantee you that. But the diet that you received tonight, right, it's a very, very good start. and I need you to really understand this concept. Please, for your own sake, go through the replay of this session. It will really help you because you understand what I've said a whole lot more better, actually. Now, Ambrose is asking a question: what is institutional trade and retail trade? Trading institutionally is trading with the footprint of the big banks, of the market makers. So there's a particular way that financial, all those big banks, there's a way they trade and they leave some footprints. Okay, so those footprints is what we want to spot. So we want to trade like they are trading. So before we enter a buy or sell scenario, we look out for the footprint of the big financial institution, and then we follow, we trade with them. We go, once they are moving with the market, we move the market. But a retail trader does not trade like the banks. Okay, that's why most retail traders lose money. All right, so you would also be learning and seeing for yourself why retail concepts do not work as we go along in this series. So you will learn why support and resistance is not very, very effective. You will learn why, heads and shoulders, end patterns, double tops and bottoms are not very, very effective. You will learn why, trend lines is not very, very effective. Okay, because those are retail concepts. All right. So that just is a major difference between retail and institutional trading. Ambrose, I hope that is clear. All right, so let me say for the 7 of us on this call tonight, now because this series is going to be very, very long, it might take a few weeks for us to get to the end of this session. If you want to compress this time frame, okay, if you want to compress this time frame, right, I'm going to be giving access to some people for a one-on-one coaching session with me. And it is only for people that make a deposit into their 10 trade account, right? So you must make a deposit of at least $500 into your account. Okay, so ultimately, excuse me, it is free for you to learn those concepts, all right? You just need to make a deposit into your 10 trade account, right? So once you make a deposit into your account, you have access to a 30 minutes to 1 hour session with me, where I would, help you compress these time frames and show you some more things, help you learn this concept a whole lot better and take you under my wings. Once you've made your deposit of $500, you can reach out to me personally on WhatsApp. We'll verify your deposit and then we'll start your one-on-one session with me. Okay, so that's for people that really want to learn this thing and truly understand. For example, this concept of market structure, right? For some people, once we start looking at it in the market, it might be a bit fuzzy. So what one-on-one would help you do is to give you some form of accountability, right? You can ask your questions in real time, okay, one-on-one, and then I provide answers for you until you understand those concepts, right? So one-on-one helps you understand concepts a whole lot faster than a group session like this. And for one-on-one, you are learning at your own pace. So it's very, very, very powerful. All right. So what do you need to do to get access to that session is to make a deposit of at least $500 into your 10 trade account. Once you make that deposit, you want to reach out to me. Let me just drop my number in the chat box, right? WhatsApp only, all right? Just chat me up and then we will set you up with that session, all right? Do we have any questions before we end tonight's session? We've been here for a bit over an hour. Unfortunately, I'd have loved to go ahead, but our session is a 1 hour session. So we have to postpone everything to the next session. Do we have any more questions, guys, on market structure so far? Right. Our next class, we would also, finish our session on market structure, and then we'll talk about liquidity in our next class. Ensure that you don't miss next class for anything. All right. Any questions, guys? Any questions? Sakulabi, you're welcome. Any more questions? Any questions? All right. So in the other of questions, I hope you got value in tonight's class. Let me know if what we are doing at 10 Trade makes sense to you. If you've learned something new in tonight's session, right, type in value in the chat box. Like I said earlier, only 10 Trade can make me teach people these things for free. If you've learned something new about the markets based on this first session, type in value in the chat box. All right, thank you, Afolabi, John, Wisdom, thank you. All right, this is the first of many classes that we have on smart money concept. Smart money concept, what you will figure out is that at the beginning, it might look a bit abstract. I won't even lie, it's a bit abstract. But the most important concept that you need to really learn when it comes to smart money concept is this concept of market structure. All right, that is your foundation. And that's why I want to take my time with market structure. So we're having 2 classes on market structure. Today's class is class 1, and our next class will be class 2. So we'll complete our class on market structure in the next class, the next time we meet on trading strategy. All right. So guys, I want to thank you for your presence here tonight, for showing up and learning how to trade smart money concepts. I want to assure you that this particular series is going to change the game for you. So ensure that you stay consistent. If you miss the session, the next session, the replay, the recording will always be made available on the YouTube channel. So you want to go to the YouTube channel and locate the recording. Okay, if you miss any session, okay, so that you can catch up when next we have another session. All right, so I wish us all the very best in our session. Wisdom is asking, when is the next session? You'll be updated in the WhatsApp group or Telegram group. I'm not sure. It might be tomorrow, it might be next week, I'm not sure. All right, so just be on the lookout on the WhatsApp groups and Telegram channels. Okay. All right, guys. So thank you so much once again. Let's have a remarkable night. God bless you. I'll see you on the next webinar. Bye for now.